I'll get started. So first thing is how many of you here who have joined this webinar who have already been trading, but who's completely new to rule-based trading or who's completely new to algo trading? So how many of them are completely new? Okay. Okay. I could see most of them are completely new. So when someone gets to learn about rule-based trading, or when someone gets started with algo trading, so what is the first thing that comes in your mind when someone says algo trading or rule-based trading, whatever? So when someone tells you about that, what is the first thing that comes to your mind? Okay. Okay, so when I'll give you just brief intro before I get started with algo trading. So what I did was I worked with Bank of America, Infosys, and other major companies from 2008. So and also I started trading in the year 2008. And when I get started with trading, it was completely random based trading. Whatever I did a trade, it was completely based on news based, or it's going to be based on what I read on the social media or what people or other people are recommending it to me. So there was never a decision which I completely took, and most of these trades was completely random in nature. So if there is some specific stocks that is being discussed on the news channel, I'll try to trade on it. And then if someone like SP Tulsian or some other experts are trying to suggest some stocks, I try to buy it. So between 2008 to 2014, most of the trades that I did was completely random based, and it was news based, not rule based. Then in 2014, I read a book called How I Made $2 Million by Nicholas Dowers. So that was the first book that I read, which is related to system based trading or rule based trading. So that book is all about a guy who's a stage performer who travels across the world, who tries to explain or who tries to trade based on certain rules, simple rules, where he tries to buy stocks which are hitting 52-week high, and he tries to get out of those stocks once it loses its trend. And that is what he all did, and he was able to make $2 million with that simple system. And after reading the book How I Made $2 Million by Nicholas Dowers, I got this conviction that okay, if anyone who's not into this markets or who's not having relevant experience related to markets, but still if he could have his own rules and try to trade it day in and day out with those rules without any modifications, it is possible to make higher returns. So that is what that book has emphasized, or no, that book has given a conviction to me to get started with rule based trading. So I started this rule based trading in 2014 and completely stopped doing any news based trading. So all I did was to create my own rules and try to deploy that through an automated system and trade it completely only those rule based system. And that has completely helped me in the last 6 to 7 years. And 2008 to 2014 was completely a struggling phase. So everybody who gets started with trading, unless and until they get started with rule based trading, they wouldn't be able to see a consistent returns. You would be able to see a good profits somewhere down the line, but that is not going to be consistent if you're not a rule based trader. So from now 2014 onwards, I've been writing articles about algo tradings. I've shared a couple of webinars. I've taken webinars with Trade School, Alice Blue, Learner, Beeline Markets, and multiple other platforms. And also, I've shared all this rule-based contents in my own YouTube channel at Square Off also. By 2017, I quit my job. No, I was working full time prior to that. I quit my job and started focusing completely on trading, as well as providing these automated trading systems. And that is when I got featured with Money Control as one of the best trader in India. So my conviction towards the data or rule-based trading system completely increased multifold from 2014 onwards, and from then onwards, the more I read about rule-based trading, the more conviction I got, and I was able to develop multiple trading strategies and was able to stick to it. So currently, everybody knows that data is a new oil, but how do we interpret these data and how you are able to make information out of it, or how you can make trade out of it, is what we're going to see in the coming slides. So everyone who gets started with markets, 99.9% know about Warren Buffett. And people who do not even know about the markets, they know about Warren Buffett, but because he is the only richest man in the world who made his wealth completely through investments in the stock market. But how many of you know Warren Buffett? Fine, but how many of you know the guy who is on the right side? Have you seen him before? And do you know this name of this guy who's running a fund called Renaissance Technologies Hedge Fund? So I came to know about this, Jim Simons only after 2014 when I get started with this algo based trading. So for people who do not know about Jim Simons, so I'll just give you a brief intro. So Jim Simons, just like Warren Buffett, he also trades in the markets, but Warren Buffett is a long-term investor, and Jim Simons is an extremely short-term trader who trades through his own algorithms through completely automated trading systems, which trades on international markets. He was actually worked as a code breaker during the with US intelligence, and later he quit his job and he has his PhD in mathematics, and he's the only math quant in hedge fund industry who started the hedge fund in 1988 itself. And he started this medallion fund which trades on stocks, equities, currencies, and commodities, all different markets through extreme short-term trading movements, where he was able to make positive returns year after year from 1988 to till date, and they were able to make more than 66% CAGR, for the last many couple of years, and they never had a losing year in any of these years. And also periods like 2000 when the dot-com bubble burst, and the periods like 2008 during financial global crisis, these Jim Simons and his fund was able to make 3-digit returns on those periods. So it is not that only on the normal days or normal less volatility period that you're going to make higher returns. Even with extremely high volatility period, they were able to make higher returns. So the point that when I tried to compare between Warren Buffett and Jim Simons is that most of us as a trader, we wanted to trade with a short-term perspective and wanted to get result as soon as possible. Whereas Warren Buffett, as you know, most of his wealth was accumulated after his 60th birthday. It is because he was able to hold on to very good business for a very, very long time, and he was able to see the results eventually. So investing has to be separate and trading has to be separate. We cannot take Warren Buffett as a role model for trading. But Jim Simons is a perfect role model for trading because he completely trades based on quantitative analysis. No rules, no fundamental analysis. He doesn't even know what that particular company that he's trading on doing as a business. So they have their own mathematical rules or quantitative rules using which they design the system, and they're able to make millions of dollars, and they're able to manage billions of dollars, and they're able to make multi-billion returns for the very, very long time. So this gave a huge conviction towards doing database trading or doing all this data analysis that I used to do. So the perfect real-time example how a simple data analysis can help is, this is the right example. So I was reading in the this was a time in September 2018 where S Bank and DHFL, both the stocks, was going down drastically. It opened gap down in the markets by 9:15, and it was a normal day. There was no news, but these two stocks, DHFL and S Bank, was going down every single minute. It was going down continuously, and nobody has any clue why these stocks were getting budget badly on that specific day on 21st of September 2018. So what I did was, eventually that day, both DHFL and S Bank crashed more than 40% in one single day. And that too was stocks like DHFL and S Bank, which is not a penny stock. Obviously, these are a big stock which has been held by multiple mutual funds. And all of a sudden, when these two stocks are crashing 40%, there is something cooking, and people couldn't know what was the real reason behind it back then at that day. So most people, there were two set of people. One set of people who were bought these stock at a higher price, and they were sitting at a 50% loss now. And there are other set of people who have not got an opportunity to get into these stocks. They are seeing that, okay, this particular stock is available at a very attractive price because they think that, okay, this is available at a 50% discount then compared to yesterday's price. And most of them wanted to buy it. So what I did is, okay, if these two stocks are fundamentally such a robust stock, which is going down 40%, then we have to do better and more data analysis and find out what are the list of stocks in the past for the last 10, 13 years is there any stock which has gone down more than 40% in one single day? I wanted to find out all those stocks. So using no data which is available with the NSE website, you can do that easily. I downloaded all those stocks into an Excel and did a calculation, and I was able to figure out there were multiple companies like Satyam Computers, Financial Technologies, Core Education, GTL, Unitech, GTL Infra, and all these companies has crashed more than 40% in one single day. So I was able to shortlist these companies. Now I wanted to find out what happened to these companies after 1, 2, 3, 5 years down the line. So I took up the chart and figured out, okay, what happened to these stocks after they crashed more than 40% in one single day. As you could see in the chart, after it has crashed, it has continuously gone down only, and it never went up or never crossed its previous high at all. The moment it crossed down, it continuously went down. So all the stocks, even for core education, which gone down, it continually went down and eventually traded as a penny stock. And the same with GTL Infra, and same with other stocks as well. So I figured out, okay, if we are going to buy this DHFL and S Bank, even though it is crashed at 50% now, obviously these two stocks can trade as a penny stock eventually, so it's better to avoid. So I written a complete detailed article in Quora back then in 2018 itself, stating this is what the historical data analysis says, but I do not know what the fundamental reason behind this. But historically, this is a probability that it can be a penny stock, so better you can avoid it. But there were multiple investors who couldn't agree with this point because they thought that this DHFL and other no, DHFL has a very good loan books, and they have this much of good fundamental values, that fundamental values, eventually people stick to it. And people who were completely believing in that fundamental factors, they stick to the DHFL and S Bank, and now it is almost lost 90 or 95% of its overall value. This is very, very important with regards to investing or with the trading. It's because you cannot know uh, combine both fundamental as well as technical aspects into a short-term trading. And that too, when a particular stock has crashed, you will only know why it is crashed eventually after a couple of months. You will not know the reason eventually. And companies like DHFL and S Bank, if it is crashing more than 40-50%, it means that there is some specific news which is known to the larger investor, which is not yet known to the retail investor. So that is why all these large mutual funds were dumping it and they're coming out as soon as possible. Obviously, there wouldn't be any smoke without fire. So people who have these large institutional holdings, they know, so they came out as soon as possible. So as a retail trader, if you are waiting for the news to confirm and then get out, the damage would be very high. So that is why it is better to do all these type of simple historical data analysis that can help you out to take a better decisions. And eventually that is what happened. DHFL and S Bank both has been trading as a penny stock now. So this is how a simple historical data analysis can help you out. So be it an investor that you're already invested into a specific stock or you're going to take a new decision, these simple data analysis can help you a lot of things with respect to trading as well as with respect to investing. So that is what I wanted to convey with the previous chart. So is it clear so far, so that I could proceed with the next slide? So you could respond in the chat window itself. Cool, fine. So I'll get started with the next slide. So this is also a important part with respect to designing a trading strategy. So we know that 95% of the traders do not follow a trading strategy, and that is why we also have the statistics of 95% of the traders do not make money in the markets. Obviously, most of them are not rule-based traders. They trade completely based on news or completely random, trading decisions has been taken care. So with respect to having a right successful trading career, three things are the utmost important part. One is having a right trading strategy, and second thing is having the right discipline to stick to those trading strategies, and third thing is position sizing. You should know how much is too much. So when I said no, initially 95% of the traders are not able to make money in the markets, it is obviously because of they do not have a specific trading strategy. Let us take the consider the other group who eventually feels that okay, there should be a certain trading system that I should have, there should be certain trading plans or trading rules that I should have in order to succeed in the markets. So they have this belief, and then they start searching about this trading strategies, start attending multiple webinars to learn about trading strategies. But still, why there are certain list of people, in spite of learning about these trading strategies, are not able to make money out of it or not able to make consistent profits out of it? It could be because of the second reason called the discipline. It is because, so when people get started with trading strategy, I'll tell you what I did as no trader who get started with rule based trading back in 2014, and what was a mistake I did. As soon as I learned about a trading strategy, my confirmation or my no conviction towards a strategy or my confidence grown to a multi-level, stating that okay, all these years I did not know about the strategy, and all of a sudden I came to know about this good strategy which is giving a beautiful backtest results, and obviously it should work. So before I get started with that, what I do not do any paper trading. I initially get started with the trading with whatever the capital that I had. So if I had 5 lakhs, I'll stop whatever I was doing earlier and I'll put all these 5 lakhs into that specific strategy and try to trade it. Now, the problem is I wouldn't be able to stick to this strategy when there is 3 or 4 or 5 consecutive losses. So your actual analytical mind will come into your picture and it would state, okay, your system is saying buy, but the market is going down, probably you should short. But why you're selling? The system is probably not working, or the system stopped working, or the system actually did not work as per the market movements. So probably the market regime has changed. So somehow you will have this doubt into this trading system, thinking okay, the trading system has completely stopped working, so you would not be able to stick to the trading system. Sticking to the trading system, having the right discipline comes only when you trade with the right capital or right position sizing. That happens because when you see all these wild fluctuations, one day having a very good profits, one day having an extreme loss. So these wild movements in fluctuations of MTM or profit happens when you're trading too much in position size. So how do we know when you're whether trading at the right size or not? Is completely based on know how your risk appetite is. Say suppose you have taken a put option into the markets, and say consider you have taken a put option on Friday and you're holding the put option. Monday's market is going to open. As a trader would do, most of the traders would do is Saturdays and Sunday till the Monday opens, they keep checking what is going to happen to the markets on Monday opening. They badly, extremely expect a gap down opening because they are holding a put option. They definitely do not want it to open a market as a gap up. So they look for all these news or what is the global factors is. Is there any specific spike in this coronavirus, or is there any new variant? So we keep thinking about all these aspects until the Monday market opens. And before that, we try to keep checking what happens with the Dow Jones, or what is happening with the SGX Nifty, what is happening with Hong Kong markets. We keep checking all this, and eventually the market opens. And if it is gap down, we would be happy. If it is gap up, we would be extremely sad. That there is 2 days of holidays. That there is no control over markets, but still we are worried about it because you are trading with the higher position size. So if the trade is going against you, that is going to put a dent on your psychological impact. Also, it is going to give you a huge loss which you're not going to handle it. Imagine you have 5 lakhs or 10 lakhs in your account, but you have taken only 2 lots of put option. Will you still do the same thing? No, never. You would not. You would be least bothered about it because you have so much of capital, but you've taken only 2 lots of put option. So the outcome is not going to affect you in any much, in any terms. So obviously, the next week or any day, even if you take all these overnight positions, you would not be worried about too much. So the right position is sizing is like if you are able to sleep peacefully overnight with your whatever the positions that you're having, and without being worried about what is going to do, what is going to happen with the markets next day, that is a perfect position sizing. So irrespective of capital, do not put all your capital into one trade and expect it to be a big great outcome. It can be a disaster too. So having the right position size is all about figuring out what is the ideal size that you can afford to lose in each and every trade. So as a trader, only thing that we can expect is forget about the outcome, because that outcome is not in our hand, but you should always focus on the risk. How much, whenever you're taking a trade, first thing that we have to ask is how much we are going to lose in this trade. But as a trader, as a beginner, what I always ask during my early age is how much I'm going to make in this trade. That is what the first question that I used to ask. But the moment I started asking how much I'm going to lose in this trade, my complete perspective changes. And no, that is when the complete shift started happening. And the second most important part is when no most people get started with the trading strategies, or no finding out trading strategies or finding out rules, first thing they ask is what is the winning accuracy of a system. So how many of you think winning accuracy is really important in trading strategies or trading rules? Okay. Okay, so most of them are expecting a winning accuracy is really important. Okay. Okay. So I could say some of them are saying important, some of them are saying not important, some of them saying or risk reward 50% is more than enough. Okay, fine. So I'll tell you what is really important with respect to trading strategies. So when I get started with designing all these rule-based system, I also had the same thought process that winning accuracy is really important, because obviously we wanted to be right most of the time as a trader. But this is a famous quote from George Soros that I wanted to convey. It is not whether you're right or wrong that is important, but how much you're going to make when you're right and how much you're going to lose when you're wrong is all that important. So I'll try to explain this fact with this simple, a slide that explains three different trading strategies. Consider you have a trading strategy which is having a 90% winning accuracy, and the other one is having a 10% winning accuracy, and the other one is having a 50% winning accuracy. So these are the three different trading systems. So let us consider why winning accuracy. I mean, I'll try to explain why winning accuracy is least matters. So in this first example of a specific trading strategy which is having a 90% winning accuracy, it is like a specific system where you are able to make a small consistent profits back to back. So if you're taking 10 trades, 9 trades is going to be profitable. So 99% of the traders would definitely want to choose this kind of system initially, because they see, okay, 9 out of 10 times I'm going to be right. Obviously this is going to be helpful in the long run, because those 9 times I'm able to make consistent lower profits. So this is like shorting that OTM option on expiry day. Consider that bank Nifty on expiry day mostly be is range bound. Once in a while it moves wildly. So consider that during those expiry days you are shorting those 5 rupees OTM option or 10 rupees OTM options, because obviously it's going to be an expiry day, it's going to expire worthless. You are going to make that whatever the premium that you're shorted, you're going to make profit out of it. So this is like I'm making 1,000 rupees every single time I'm making profit. But once in a while, when the market goes wildly against me, I'm losing 10,000 rupees, which is 10 times of what I'm making as an average profit. So this system, even though you're 90% you're right, if you consider what is the outcome after 100 trades, it is going to be net negative of minus 10,000. So irrespective of you being right 90% of the time, you are not able to make a positive returns after 100 trades, because the one losing trade that you're making is eating up all your profits and also putting you in a higher loss. So the second system, which is like 10% winning accuracy, which means that if there are 10 trades, only one trade is going to be right, remaining 99 trades is going to be wrong. This is like opposite example of the other one, which we shorted OTM option in the first example. Here we are buying OTM options, because in the last expiry or some other expiry, you thought, okay, bank Nifty moved wildly. This 2 rupees option moved to 20 rupees and then moved to 200 rupees. Probably if I am able to buy this 2 rupees option, what I'm going to lose? I'm going to lose only probably 2 rupees. But if I'm going to be right, I'm going to be right 10 times, 20 times higher returns. So people try to buy these OTM options on expiry days. So what would be the outcome after 100 trades? So it is like you buy and you make profit of from 2 rupees, you are able to make 20 or 200. But when you're wrong, you are losing that 2 rupees, and you're losing the 2 rupees back to back in each and every expiry. So after 100 trades, if you consider, so the average profit, say suppose if you are right, you are making 10,000 rupees. But if you're wrong, you're losing only 1,000 rupees. So you are okay with it, because my loss is minimal and my profit is 10 times higher than my loss. So you are happy with it and you're trying to trade the system. After 100 trades, this system is actually a net profitable system. So even though in spite of you losing 90% of the time, you're able to make a positive outcome returns after 100 trades, because your average profit is much higher than your average loss. So obviously you are able to make a higher returns after 100 trades. But psychologically, it would be very, very difficult to trade this kind of system. Imagine you taking a trade and losing expiry after expiry, and you're not able to make good returns. So eventually you lose out. Eventually you lose confidence in the system and you stop trading the system. And I could see that some people are saying they're not able to hear me. Please confirm if you are able to hear me and if you're still able to see my screen. Okay. Okay, then there could be an issue at your end. So please try to rejoin in case if you're not able to listen to my audio. So this is what I wanted to convey. So with even though you have a 90% losing system, still this is going to be a positive outcome for you. But psychologically, it is very difficult to trade system because nobody wants to be wrong 90% of the time. So you wouldn't be able to trade this kind of system on a live scenario. Backtest it's good, but in live it is very, very difficult to trade this kind of system, which is having extremely low winning accuracy. Consider the third one, which is the most practical one and which is the most followed one. And that is what mostly applicable with most of the trend following trading strategies, which is having a 50% winning accuracy. You take any trading system, which will be divided into only two categories, either trend following or mean reversion. So 90% of these traders who are making good high returns, or they'll be able to use a breakout or trend following system. The idea behind a trend following system is, on an average, most of the trend following system will have a winning accuracy anywhere between 40 to 45%, which is less than 50% in fact. But still they are able to make higher returns because they are able to protect their loss extremely with extreme risk management systems. And when it comes to profit, they don't use any targets. That is a problem with most of the beginners. So when they get started with the trading systems or trading rules, first thing they ask is what is a stop loss, and second thing they ask is what is a target. When you're trading a trend following system, if you use a target, you're going to come out with a very, very short profits. So I'll tell you how trend following systems statistically work. Trend following system follows a Pareto principle. It's like 80% of your overall profits will come from less than 20% of your trades. That is how trend following works. Nobody knows when the market is going to trend big time, but over the long run there will be couple of days that the market is going to give you extreme trending movement. So these trend followers are okay to take losses on other days, other sideways days, and when the big trending happens, they'll try to capture the maximum trend. They'll not come out with a fixed target, okay, let me come out with 5%, 10%. No, they don't do it. They'll try to get into a trade and they'll try to hold it as long as possible until the trend ends, or until, as an intraday trader, until EOD they'll hold it. So that is how we also designed our trend following system. So with this third example, you consider this: when you're right, you're making 2000 rupees, and when you're wrong, you're losing only 1000 rupees, which is two times of what you are making as a loss during your profitable trades. So after 100 trades, if you consider this third trading system, it is giving you the highest outcome of all three, which is giving you 50,000 rupees of overall profits after 100 trades, in spite of having only 50% winning accuracy, because your risk reward ratio is so high. So when you are trying to figure out a trading system or create a trading system or try to analyze other trading system, don't just go only with the winning accuracy. Find out what is the risk reward ratio and then find out what is the winning accuracy. That is going to give you a clear picture rather than just blindly going with the winning accuracy. So that is what I wanted to convey behind all these slides. So in the next two slides, I have two simple things, which is a simple trend following. I mean, a simple trading strategies, which is widely used by most of the option traders. We use the same thing and we deployed it in live in the last year, and it was able to make the highest profit through our trading bots, compared to all other bots. So I'll try to explain two different trading bots which we currently use or being used by most of our bot users, and I'll explain how it's been helping them. So the first thing is Bank Nifty short straddle strategy, which is now it is being widely popular in most people call it as 920 short straddle strategy. But when we started it live in last year, August or September 2020, and nobody, very very few people know about this, and nobody had this belief that this simple strategy is going to make such outstanding returns. I'll explain the rules behind this simple strategy. What happens is you are going to short both the call option and put option at 9:20 a.m. every day. You find out what is the bank nifty levels. You find out where the bank nifty is currently trading at, and whatever the levels it is currently trading at. Say suppose if it is trading at 30,000, you are going to short 30,000 call option, 30,000 put option, and you're going to use a 25% stop loss. That's all. No complex rules, no indicators, no charts, nothing. All you have to do is every single day at 9:20 a.m. find out what is the bank nifty levels and short both the call option as well as put option with a fixed 25% stop loss on each leg. Whichever the leg stop loss is going to hit, that's all. That leg will be closed, and the remaining leg will be hold on to it till end of the day. And this is what we are going to do every single day, and this will be with weekly expiry. And whatever the levels that we are comparing with the bank nifty no levels is going to be on the bank nifty spot levels. So you do this and you figure out, okay, this is what bank nifty level is. Say suppose currently bank nifty is at 31,584, which means if you're rounding it off, it is 31,600, or sorry, 31,500. So you short both the call option and put option with a 25% stop loss, and the bot will automatically place both no call option and put option stop loss. That's all. You don't need to do anything. So the as a user, all they do is they just come into the bot. If you're a manual user, you just have to do all this manually, but as a bot user, what they do is they just come and input. I'll explain the bot functionality later on, but the strategy wise, this is what it is. So it shorts both the call option and put option with a 25% stop loss. And whatever the stop loss is getting hit, it will exit by end of the day. If any of the leg is not hit the stop loss, it will be hold on to the end of the day and it will be closed. And this specific system was all able to make more than 1 crores of overall profits for all the bot users. Earlier there was no margin rules applicable. So earlier some people were trading with 50,000, some people were trading with 80,000, some people were trading with 1 lakh, whatever the brokers allows them to trade with margin. But now the margin is going to be same, is actually same across all brokers. But back then there were certain list of people who, even though know the strategy is simple, they thought that okay, probably instead of trading with higher capital, I should trade with the exact margin that the broker asked me. So probably they would be trading with 50,000. Say suppose I'm trading, if the broker allows me to take the short straddle position with 50,000, I'll explain why it is bad. Say suppose this is how your premium looks like between Monday to Friday. So Friday being the start of the expiry, obviously the no values would be at the higher levels. So consider for an example, if it is trading at 500 rupees, the call option and the put option of ATM. On Monday it would be 400, Tuesday it would be 300, Wednesday it would be 200. As there no days comes near to expiry, obviously it gets decays. So this is how the ATM options on each days looks like. And as per the rules, we said that we are using 25% stop loss on the premium. So this is how your stop loss is going to be on a day wise. So on Friday, if your stop loss is hit, it is going to be 3,000 rupees per lot. Monday it would be around 2,500 rupees. Tuesday 1,800. Wednesday, Thursday, these are the levels. This is if one side stop loss is hit. Consider both the worst case scenario of stop loss getting hit on both call option as well as put option. So obviously you are going to lose two times. So which is 5,000 on Mondays and 6,000 on Fridays. These are how the stop loss gets hits on different levels. So as I said at the beginning of this slide, when even if broker allows you to take this position with 50,000 capital, and if both the side stop losses hit, you are going to lose 5,000. So if your capital is 50,000 and if your loss is 5,000, you are losing 10% in just one single trade. So that is why we were completely against using such kind of high leverage. Even from the day one, we have recommended our users to trade with 2 lakhs of capital, even though your broker allows you to trade with 50,000 back then. So what happens is when someone traded with 2 lakhs of capital, and if the stop loss is hit, he's going to lose only 3%. And the next day is going to lose only 2%. And now we have recommended capital to 3 lakhs. So since still, if someone know where both the stop losses get hits, he is going to lose less than 2% in one single trade. So on that is how I told you about this why position size matters, how much is too much is because you shouldn't just trade with what the broker is asking you to trade with the required margin. There should always be enough buffer. You should calculate how much you're capable enough, or how much your risk appetite is. Accordingly you choose your capital. So currently we have recommended 3 lakhs as a capital to trade this specific strategies or bot where obviously if the stop loss is hit on both the sides, we are going to lose less than 2% in one single trade, which is much more convenient. So this is how the back tested results looks like. So when we posted this in the last year, so from year on year it was actually profitable trading system, and the maximum drawdown for the system was almost around 35,000, and the required margin is around currently 1.8 lakhs. So if you have 2.75 to 3 lakhs, this is how your returns is going to be on an average on a year wise. So 30%, 40%, 86%, and 2020 was phenomenal because of extreme volatility. Most of the options were trading at a higher premium, so it was able to make higher returns. So this is the actual live performance from the day that we started to till date. Excuse me. So if you see from date, from all last year September, October we started it, and almost it's more than 1 year now, and it was almost made 1.2 crores of overall profits for all the bot users who traded this strategy. And no, I'll just show you how it worked with, say, suppose if someone had traded with only one lot, or if someone traded with only 3 lakhs of capital, I'll explain how it worked, or how much it has made in one lot basis. Because this 1.2 crores of 1.2 crores of overall profits that you see is for um, overall cumulative returns. Like, it's over the bot users who traded our system. This is what is the overall returns looks like. Let me try to show you what is the live performance if someone traded this system for one lot. So if you go to this link, performance.squareofbots.com, you would be able to see the performance of all the bots. Whatever the bots or whatever the strategies that we have been giving live, people would be able to see all the bots. So I'm just going to this link and click on Bank Nifty short straddle, which is going displayed. Okay, it has made almost 87% of profits in the last 1 year. So you can just scroll down and you could see how many number of days it ended up in profits and how many number of days it ended up in green. Like, if you could see, most of the days, almost 140 days, it ended up in green. Less than 85 days, it ended up in loss. And also, if you scroll down, you would be able to see what is the actual profit that was made on day wise. So Monday, Tuesday, Wednesday, Thursdays, most of the days are profitable. On Fridays, it was not much profitable. It was almost flat. It was minus 1% overall. So if you scroll down, you would be able to see what is the actual profit people have made with one lot. So this is how their one lot profit looks like, where it has almost made 2.6 lakhs of overall profits. So with 3 lakhs of capital, 2.6 is the overall profit they made. And even if you wanted to see what is a month-wise PNL, so how much they made. So December till date, they have made almost 9,800 rupees profit for 3 lakhs of capital. And November, it was not good. It was just 600. And October, it was minus 4,000. September, August, July, June, most of the days are profitable. So if you could see, in the last 1 year, so only there were 1 or 2 months which ended up in flat to negative. Rest of the days it was mostly profits. And even if you scroll down and see what is the last 30 days profit, you would be able to see most of the days the profits varies between minus 5,000 to plus 5,000. So this kind of strategies is much easier to trade, because you would not be in a root shock. So tomorrow you are not going to see, oh my god, I lost 30,000 or 40,000 in one single trade. That is not going to happen, because even if both the stop loss is hit on both the legs, the maximum loss that you're going to see is anyway between minus 3,000 to 5,000. So with the 3 lakhs of capital, that is going to be just 1% or 2% of your overall capital, which is easier to handle. So obviously, this kind of systems helps you to stick to the system for a longer run. Like, you would not be panicked even if there is drawdowns. For an example, if you consider these periods, like between just February to March in 2020, when it went down drastically, so almost people had 60,000 loss. When I'm trading with 3 lakhs of capital and I'm facing 60,000 loss, it is just 20% of my overall capital I'm losing here. That also eventually recovered. So which means that even when something is going wrong, you are not going to lose a considerable amount of money, and you're able to stick to the system, and obviously you're able to make higher returns. So when you're trading with the right position sizing, as I explained earlier, you would be able to stick to the system during these tough phases, and you would be able to continue to it. So no matter what, these systems would not affect you much, or it is much easier to trade all the systems. And I'll try to explain what happens with the other system, the topmost or the most profitable trading system that we have is a machine learning bot. So this machine learning bot, it's a directional option selling system which trades which trades both bank nifty as well as nifty as a no intraday basis, where it picks up whether it should short the call option or it should short the put option, and accordingly it takes a trade. And no by it also uses a 25% stop loss and tries to come out of it if the stop loss is hit, or it tries to go with the trend. So the idea behind the machine learning bot is to decide this course or decide the strategies on by creating the rules by itself, and it decides whether it should short the call option or it should short the put option. And if you could see, this is the bot which has made the most consistent profits on a day-to-day basis without much or higher drawdowns, where it has almost made 1.4 crores of overall profits till date for all the bot users. And since this bot trades on both Nifty and Bank Nifty, it is completely diversified with between these two indexes, and that is why if you see Monday to Friday, this is the only bot which is able to make positive overall returns complete from Monday to Friday. And with the 4 lakhs of recommended capital, this bot is able to make almost 2.3 lakhs of overall profits in the last 1 year. And this bot also started in the last September or October. And if you could see, this is how the overall returns looks like for one lot. And this one also takes the trades completely based on market movements. If you could see, only January and July ended up in negative. Rest all the months it ended up in positive returns. In fact, the returns are much higher than the bank nifty short straddle. Like November it made 25,000, October it made 27, August it made 34. So this month it made 5,700 profit. So someone who gets started with trading strategies, or someone who wanted to get started with our trading bots, these are the two topmost bots that we recommend, which gives the most consistent returns completely based on options. And these two, ML bot, machine learning bot, and bank nifty short straddle, or option selling bot. And we have the other one which is called option buying bot, which also completely trades based on bank nifty options breakout system. That we recommend that the capital is almost 1.5 lakhs to trade with, where it has almost made 50,000 profits in the last 3 months. So these are some of the three most important trading systems, or three most consistent performing systems, which is able to make higher profits. And all the user has to do is they just have to log into the bot and give input to the bot, and accordingly it initiates a trend. It initiates a trade. Let me explain you how it works. So if you just go to squareofbots.com, this is a website. As a user, all they do is they just go to the squareofbots.com every day between 8 o'clock to 9 o'clock in the morning. It doesn't work before that. And also you should give input before the market opens, because from 9:15 the bot would start firing the orders. So we recommend the users to log into the bot. Like you just click on login, it would take you to this respective brokers like Fires, Angel Broking, Edelweiss, all this. So you click on Alice Blue, so that now you can log in with your Alice Blue credentials. So I just enter my Alice Blue login credentials, whatever my Alice Blue login credentials, I'll just sign in. You just authenticate it with your required credentials and you just enter into it. So now you would be able to see the dashboard, the algo dashboard, which is nothing but we have combined the strategies into options, futures, and equity. So all you have to do is just say, suppose you log into this no options bot, and I could see just log, whatever the lot size I wanted to trade 2 lots. I click on 2 and click on trade, and it would be in running state. So whatever the orders that is being fired by this machine learning bot, I would be able to see in the orders tab. Also, you would be able to see the same in your Alice Blue broking platform or broking trading portal as well. So as a user, once you enter the capital or once you enter the lot size, whatever the lot size that you wanted to trade, just enter it and leave it to the bot. The bot would automatically place the entry, stop loss, and also by day end, you don't need to manually square off the position. The bot will automatically square off the positions by 3:05 or 3:10 p.m. every single day. Because if you don't square off, the broker will square off and they're going to charge you additionally 20 rupees per order. So the bot would do it. So the only requirement from the user side is they just have to log into this specific squareofbots.com, authenticate with your Alice Blue credentials, and just give input to the bot. So any user who gets started with these bots, they'll have a 7 days of free trial, to get started to try out the bots. So if you have an existing Alice Blue account, you get 7 days of free trial. And if you are a new guy who do not have an Alice Blue account, you can open an Alice Blue account under square of referral in the same portal. Like if you go to the squareofbots.com, you would be able to see an option to open an account under square of all these brokers. So for people who open an account under Alice Blue, they get 3 bots free of access. So they don't need to pay any additional charges, because we charge 29,500 per year as to charge, to access all the bots. However, for Alice Blue users, we give them 3 bots completely free of cost, where they don't need to pay any charges if they open an account under us. And also for people who wanted to take a free trial, they can just directly log in and it would prompt you to start trial. So once you click on start trial, that's all. There is no payments, no deduction, nothing. There is no additional charges also you need to pay to the broker for using these APIs or the portals. So only the brokerage gets deducted. Other than that, there is no additional charges you need to pay to the broker. But as a subscription of these bonds, we charge 25,000 plus GST for per year basis. And for recommended capital, if you could see, what is the recommended capital for each of these bots. So most of our users, what they do is they pick up one bot under each category. So if I'm trading with equity, 50,000 is a minimum capital requirement. So in equity, most of the users trade with RSA bot, which requires 50,000 capital. They can just give input and trade in it. And futures, people trade with this golden ratio strategy. And options, most people trade with ML bot, or they mostly trade with Bank Nifty short straddle bot. So even though you have multiple strategies, these are the 4 or 5 bots where most of the people will get started with. And they allocate these capital or give an input to these bots, and automatically it gets executed in their own account. So this is what overall the bot functionality is. So if you guys have any specific questions, now you can post it in the questions window. I'll try to pick up the questions and address it. Regarding the monthly charges, yeah, we do not have any monthly charges. We have only yearly charges, because it is not good to get started with monthly charges. So if you start with monthly charges, more users will come to us. But the thing is, you can't expect good returns on every monthly basis. If you're expecting a good returns on a quarterly basis, on a yearly basis, it makes sense. But it is just like going to a gym, where you can't go to a gym and expect the returns in a 1 month or 2 months. So people obviously need to get committed to it at least for a yearly period, so that they would be able to see a good returns on the longer period. And for people who wanted to know what is the SEBI regulations, whether the algo trade is going to get banned, and or whether is there any specific restrictions that is going to happen, and all these people who have those questions in their mind, they can go to this detailed article that I have written and posted it here, where if you could see it, you would be able. Let me share it in the chat window, so that everyone could read it. So I would recommend you to go through this detailed article after the session, which addresses all the important factors of all the SEBI regulations, rules, and whatever the consultation paper that they have mentioned. And people who wanted to know the performance of each of these bots, they can directly go to squareofbots.com, performance.squareofbots.com, and then they could be able to see it. So the list of bots that we said, which is free, would be this GRB options bot, and Bank Nifty 1% short straddle bot, and Bank Nifty 1% Nifty short straddle bot. These are the 3 bots they would get at free of cost. And additionally, instead of 1 week free trial, they'll get 1 month free trial with the machine learning bot. So all the users who open an account under Alice Blue, they would be able to get 1 month access to ML bot instead of just 1 week. So 90% of the users who have taken a trial with us, they eventually get subscribed to it, because they would be able to get the profit in those 1 week itself most of the time. So if you scroll down and see what is the actual last 1 month profit or 1 week profit, you would be able to see the overall returns. So instead of telling the performance, it's better to have the recommended capital in your account and just take trial for a week or 2. You would be able to see the good returns out of it. So with regards to technical issues, no, we haven't faced any specific technical issues in the last 1.5 years. We have faced 3 times of no technical issues, where there was no response from the broker's API side to place the orders. So during such days, So what happens is, as a routine check-in, we do all these checks by 7 or 8 o'clock in the morning itself. So if there are any issues during those time frame itself, then we notify the bot user stating the bot wouldn't work today. So there would people will not be able to give input to the bot. So in last 1.5 years, only 3 times it has happened. But we, other than that, we never faced any extreme issues. So there is no people who are having a lesser capital, they can only stick to equity cash markets. But if they are trying to trade with the ML bot, 4 lakhs is the minimum required capital. For other bots, the 3 lakhs is the minimum required capital to trade one lot. So it is, can I run my own strategy? No, there is no possibility to run your own strategy because it all comes with inbuilt strategies. However, we have a new platform called optionx.in. So people who are having their own option strategy, they can just check out this platform called optionx.in, where it has all this inbuilt strategy. I mean, as this simple drag and drop rule mechanism where they can just design their own stop loss, design their own target, and trade this short strategy. So if you're someone who wanted to customize your short strategy, then you can use option X, but it is not fully automated. You just have to click to execute. So yeah, so is it now really required to give input to the bots every single day? Yes, it is mandatory to give input to the bots every single day, because if you don't give input on that day, then the authentication doesn't happen at your end. So there will not be any orders goes through at your end. And if there are days that you do not want to trade, then those days you just simply avoid giving any inputs to those bots. If we get capital through collateral, what is the minimum recommended cash to absorb drawdowns? So that is simplified. So all you have to do is just go to this performance.squareofbots.com and find out what is the maximum drawdown. So you could see the maximum drawdown for each and every bot here. So find out what is the maximum drawdown. So just have to 1.5 times or 2 times of this maximum drawdown as your cash or buffer capital, and remaining capital you can just use your stocks collateral. So people who are already having stock holdings in their account, they can just pledge that and use that as a margin to trade the bots. So they don't need to bring in additional capital to trade the bots. Whatever the stocks you have in your holdings, you can just simply pledge that and keep this drawdown as a cash to handle these negative MTMs. That would be sufficient enough. If someone has API subscription on Zerodha, can they deploy strategies via Square Off? No, RBots doesn't support Square Off. I mean, sorry, RBots doesn't support Zerodha, and RBots works only with these 4 or 5 brokers that we have associated with. So you can go to squareoffbots.com homepage to see what are the list of brokers that we have associated with. So the option buying bots. So I'll just share the screen also. So I mean, I'll just share this link also to everyone. So people who wanted to check out the performance of each and every bot, they could check it out here. And for people who just wanted to get start, I mean, trade all this free trial, just let me share the link for that. So people who want to take free trial, they can just directly go to this link and get started with the free trial. And people who wanted to open an account, they can just go to this link and scroll down and click on any of these respective brokers to open an account. And also, yeah, say suppose if you wanted to modify anything, whatever it is running, say suppose what you see by 11 o'clock or 12 o'clock, the position is giving some 5,000 profit or 6,000 profit, you can simply click on the square of positions, which will close all your open positions, all your open intraday position at once. Just by clicking square off button is enough. So you don't actually need to wait till end of the day. It can close your positions and book profit anytime that you want. So there is no specific restrictions on that. So we do not currently have any positional system. So for the question having whether we have any specific positional system or swing trading bots, no, all our trading bots are completely intraday basis. So we do not have any positional system. So for people who wanted to get started with the bots, wanted to try it out for the next couple of days, I would recommend you to get started with the option bots, which is machine learning bot and bank Nifty short straddle bot. So you check out what is the recommended capital for these two bots. And if you have, 5 to 7 lakhs of capital, you can trade with the ML bot and short straddle bot, and you would be able to see, the results that you see in the performance page. So those are the two, bots that we recommend. So we don't use any stop loss market orders. So how the execution happens is we use a range limit modifier execution functionality. So what happens is, in order to handle all these free trades that has happened in the past, we provide only limit order functionality, which means that it places a stop loss limit order. So if your limit order is filled, then good, you are not going to have any slippages and it's going to get executed. And if the stop loss limit order is not filled, the bot would continuously monitor your position and see whether it is exited or not within the next 30 seconds. And if it is exited, it's fine. If it is not exited, it would automatically exit the positions by itself. So all these, execution mechanisms are already inbuilt, so there is no issues into it. And is machine learning bot is an option selling or option buying? It is an option selling bot. It is a directional option selling bot. It shorts whether CE or it shorts PE. So it doesn't short both options. And all the the complete cost to access all the bots is 25,000 plus GST per year. And for users who open account through Square Off, open Alice Blue account through Square Off, they get 1 month no free trial access instead of 1 week free trial. And also in addition to that, they get 3 bots free of cost, which is this Bank Nifty option buying strategy, which is this GRB option buying options, and also the 1% short straddle Bank Nifty and 1% short straddle Bank Nifty. Nifty. So these are the 3 bots they get access to it. Rest of the bots are charged 29,500 per year. Yes, people who wanted to run multiple systems, they can definitely do it, because the idea behind having multiple systems is to run uncorrelated strategies so that you would be able to make overall good returns, like this, like overall a good smooth equity curve without much drawdowns. Like if you could see, our overall profits has almost crossed 4 crores of overall profits for all the users. And if you scroll down and see, you would be able to see, like ML bot, Bank Nifty short straddle bot, GRB is the golden ratio futures bot, RSI is the mean reversion bot, and GRB options is the option buying bot. These are the top 5 bots which has made the highest profits overall. So definitely would recommend you to get started with these bots. So the subscription fee, as I mentioned earlier, so it is a fixed cost, which is 25,500 plus GST per year to access all the bots. So there is no monthly plans we have. We have only yearly plans. And also, I hope once you take a trial for next 1 week, you would be able to see how it performs. And also you would be able to see all these returns directly at your Alice Blue portal itself. And also people who wanted to know the actual details behind each of these bots, I recommend you to go to this link where squareoff.in or trading bots. You would be able to see the complete details of all the bots, all the strategies, all the details you would be able to see in this link. So I hope I conveyed most of the queries. And and the thing is, with respect to ML bot is machine learning bot works based on complex algorithms, so it doesn't support FIREs or other brokers. It currently supports only Alice Blue and Angel Broking. It doesn't support other brokers yet because of the robust API Alice Blue and Angel has. The other brokers API are not robust enough to handle ML bot execution. So ML bot is currently supported only with Alice Blue and Angel. So thanks guys. And if you guys have any specific questions, I request you to post it on support@squareoff.in. Whatever the queries that you have, it should be addressed. So I'll just share the email ID here. So this is the email ID that you can reach us to. So hope most of the queries has been addressed. And thank you so much for your time. And thank you really for waiting for almost 30 minutes to get started. So I'm hope this session is really helpful for everyone. Thank you guys.